This week, we've been focusing on Reverse Iron Condor SPY edition. You're basically buying an at-the-money call and put, a 0-day, a couple times a day. By doing that 4 days a week, you're going to tell me that this negative theta 0-day trade over time, right, over some years, a 3-year period is going to make money. I would think to myself, the man of La Mancha, the impossible dream. But folks, the data shows something different. Even in a small account, this is just something maybe somebody could do. We're focusing on small accounts, something somebody would be comfortable with, like one contract. This is a trade that you can see it's gone a period of 3 years from May 16th, 2022 to April 14th, 2025. There were 434 trades. That's a lot of occurrences. Now, I'm going to get to the trade. I'm going to show you an example of the trade today. So quite a bit of occurrences. When you have a negative theta trade on a daily basis, you wouldn't expect a big win percentage. This win percentage is 51.8%. It has a very nice MAR ratio. The MAR ratio is used to measure returns adjusted for risk, right? Risk is everything, right? People, as they say, you can't handle the truth. Most people can't handle a big drawdown. The MAR ratio is taking the CAGR, compound annual growth rate, divided by your max drawdown, so 56.6 divided by 8, gives you a MAR ratio. So it's a nice number to measure returns, but it's adjusted for risk. Max drawdowns are very debilitating. Now, for a small account, we have starting capital $5,000, and we're going to limit this, I'm going to show you in a second, to one contract. Here's the interesting thing. So every day, except for Monday, it was put on at 9:35 and 12:30 Eastern. This is two doses of negative theta trade, high negative theta trade. This is 0-day, every day. So again, the impossible dream. Every Tuesday, Thursday, Friday, Tuesday, Wednesday, Thursday, Friday. Use exact days to expiration. This is going to be a 0-day. Allocate 5% of portfolio. You're going to do one contract per trade. And again, you're buying the put at the money. You're going to buy a call basically at the money. You're going to leave the put side open up. A lot of times you get big moves down. You're going to leave that alone. On the upside, you're going to sell a call 4 points above the call you're buying. So you've got the call debit spread on the upside. You've got the put on the downside. Now, generally, this is long vega, negative theta. We're going to do this trade for a minimum move down of 0.02 at the opening, right? You want just a minimal tick of VIX down at the opening. That's a good thing to put in there because you'd rather buy options when the vol's a little cheaper. And the last feature here, gap up. You don't want more than a gap up of maximum 1%. And you don't get a ton of those in the SPX. You get more of those on the downside. Then you exit the trade at 3:56 p.m. You get a few opening fees, entry slippage, exit slippage, easy for you to say, Dan, to make it very realistic. Starting capital $5,000, ending capital $18,503. Not a big deal, but that's over 3 times your investment on a long premium trade. You can see the graph there, very steady. I'm going to zero in here on a couple things. Troy did this April 9th, was the last one, 2025, back to April 22. This trade varies depending on volatility, different things. Could be $2, could be a bit higher, depending on when you do it, but you get a lot of losers, right? Why do you get a lot of losers? Because you don't have a high probability on it. It's negative theta. On a down day, there's no limit. You're not capping the downside, you're capping the upside. The upside doesn't run the big distances usually as the downside does. You have to develop some calluses. You got to be a little bit of Clint Eastwood as a trader, maybe a little bit of Charles Bronson, to look at this from a big perspective and know you might get 6 or 7 bruises in a row, and then you'll get some winners. You can see the losers might be 100, 200, whatever. Here's a couple winners in green. You can see $800. You're buying an at-the-money call, at-the-money put, selling the call 4 points up. Now, if you go to December 18th and 19th, you could see both of these put on, one at 12:30 p.m., one at 9:35 a.m. on December 18th for $2 and $3, and they each went up to about $1,300, $1,100. Those were big moves down. So it's a patience game again. You got to build up calluses here. You got to be a bit of a Charles Bronson, but the data has this as a very good trade. And with the tweaks in it, I think this is the way to trade it. Now, if you look at this, I took a screenshot of this. So this would be about the time that you would be doing this trade. You can see here today on May 16th, this is the trade. When we were at 590.23, a little bit earlier in the day, here would have been the trade. And you can see it looks like a ratio back spread. It's just the upside is leveled off because of the short call. The downside is, as Jackie Gleason would say, to the moon, Alice. And you can see here, I'm buying a May 16, 590 put, $1.14. Buying a May 16, 590 call, $1.40. Getting a little bit for the May 16, 594 call. It's 16 cents. I paid $2.38 debit. And that's what it was at 590.23. If you look at that trade a couple hours later, here's the trade. Locked in, we paid $2.38 debit. That's the investment. Right now, we're up 32 points in SPX, 3 points in SPY, only 0.5%. If you look at it right now, we've moved from when I took the screenshot around the times we would have executed the trade. We were 590.23. We're at 593.60 now. So we're up here in the upper end here. And this trade at 593.60 is up around $90, $95. If you just put $90 divided by 238, it's almost a 38% return today on that trade. As you go up, you get longer deltas. It's one of those trades, do you need to pick the direction? No, you need it to move. It's a long gamut trade when you start out. You get positive deltas on the upside, negative deltas on the downside. So I hope that helped a little bit. Any trade can work if you have the right risk management, put a little thought into it, and have the data. So folks, have a good weekend, and we'll see you next time. Thanks a lot. Bye-bye.